Welcome to today's stream. Super excited to see you here as always. Lots of big news, as usual, to cover in the cryptocurrency space. Mark Cuban has been hacked for nearly $1 million worth of cryptocurrencies. I also want to talk about what's going on with Bitcoin, what's going on with Ethereum. A year now after the merge has happened for Ethereum, what have been the actual on-chain results for this? It's pretty surprising results. Also, some macro stuff to cover. Of course, we have to cover some macro stuff because macro has been uncomfortably important during this entire market cycle. Of course, quick shout out to everybody joining this on the live stream, whether that be here on YouTube or over on X. And of course, shout out to everybody listening to this later on the podcast on Apple or on Spotify. So I think we just jump straight into this and let's talk about the price of Bitcoin. One of our favorite topics, of course, here in general in life. We love talking about the price of Bitcoin. What's it doing these days? Well, let's take a look and see what the price of Bitcoin is doing right now. So, very interesting stuff here. We're going to take a look at the daily, and then we're going to take a look at the weekly. And I know, Pew Pew Tube, see you in the chat there. I know the price action has been pretty damn boring recently. Still, though, there is something to talk about with the price action. So I do want to mention that real quickly. Now, we are in the process of potentially confirming that bearish cross, that death cross here for Bitcoin, as we see the 50-day EMA about to slip under the 200-day EMA. Not amazing, generally not a great sign to get a death cross. I mean, who would have guessed from such a lovely name like that, right? Regardless, death cross could almost be here, not confirmed yet, but almost here. When that happens, not great, but keep in mind that this is not a super clear signal. It doesn't 100% mean there's going to be a massive breakdown in the price. Could, but doesn't always happen like that. Sometimes these are quite short-lived before a new rally comes in. I mean, imagine if we got news that the Bitcoin ETF was approved next week, it would, of course, very quickly invalidate any death cross that came through. Right now, we're also seeing the stochastic RSI looking a bit topped out here on the daily. MACD is still trending up for us on the daily. So, hey, at least we have some signs of hope here in the markets. And of course, what did really all of this recent price move mean, where we saw the price rally from the 12th of September up until the 15th of September? Basically, another failed rally, a failed attempt to get back over those key moving averages and to conquer back over key areas of price resistance. Didn't work out this time, unfortunately, for us. Let's zoom out to the weekly here. Might get a better view on what is going on here to an extent. Now, the weekly paints a very different picture in some interesting ways. You see, on the weekly, we are still trading above the 200-week exponential moving average. In fact, for the last 5 weeks, ever since the major sell-off back in the second week of August, for the last 5 weeks, we have seen the price of Bitcoin dip under this key moving average of the 200-day EMA. And each of those times, the weekly candle body closed above the 200-day or 200-week exponential moving average. So we saw wicks under it, but it wasn't sustained. We saw buyers step in and push the price back up. Last week's candle was a bullish engulfing candle. It's got some pretty nasty wicks on it. It's not as clean as I would love it to be, but we did see a significant reversal from those very, very tight range candles that over the last few weeks have really typified. Now, of course, we had that big fat red candle back in the second week of August, where the price of Bitcoin fell from about $30,000 down to about $25,000 in a week's time. That was a fun week. The next 3 weeks, the closing and opening price of Bitcoin was no more than a couple $100s per week, in spite of some pretty big price volatility throughout the week. The weekly opens and closes were only a few $100s apart. Pretty wild lack of volatility if you look at the weekly time frame, in spite of those wicks on the candles going up or down in either direction. So we did see a bit of price action picking up here, but nothing of great significance, to be honest, at this point. And I'd really like to see us retaking the 50-week exponential moving average, which, of course, is right here around $27,000, which is where those daily moving averages, of course, are also lining up. One silver lining here, I suppose, for us on the weekly, the stochastic RSI currently putting in a bullish crossover. Well, it actually happened last week. We'll see how that plays out, but noteworthy. Let's call it that. So I like this one as well. Here's what you need to see the prices of our crypto assets go up, of our magic internet money go back up. You need more money in the market. You need more people to bring their money in, dump it into whatever your favorite asset might be, and then the price will go up. It's a pretty simple concept. Patrick Scott here on X pointing out the total market cap of all stablecoins has increased on a 30-day time frame yesterday for the first time since April 2022. Cool. If you blink on that chart here, you're going to miss it. It's a very, very modest increase at this point, but at least money's not fleeing the market. Knock on wood, currently. But it is nice to see. We need that money to come back into the market in a significant way in order to see the prices of our assets pump up. Right now, it's just a slow, kind of boring accumulation phase of the market. And I know that's actually a very difficult phase in the market for a lot of people because it's easy to get, just washed out, either by chasing scam coins or over leveraging. Because, well, I know the market's not very exciting. If I use 50x leverage, then a 2% move is going to get me some really big gains. Yeah, but then if 2% move to the downside, it's going to totally liquidate you. So be careful. Remember, of course, if you are using leverage, keep it to a minimum. You don't need huge leverage. Leverage is an extra tool to juice up your gains a little bit, but it doesn't have to be used to squeeze yourself out of future profits. Still, though, nice to see a little bit of money coming back into the markets here. I also want to share this with you. I thought it was pretty interesting. So this is from Octavio. And Octavio says that treasuries are no longer the safest asset. This is actually quite interesting. He said, in fact, for the first time in 45 years, U.S. treasuries now have higher downside volatility than gold. This is undeniably crucial. The shifting dynamics of capital moving away from crowded equity and fixed income holdings as investors seek new investment opportunities could have profound implications on financial markets. This is where gold, commodities, and overall hard assets are poised to play a significant role during the transition phase from traditional 60-40 portfolios. Now, of course, there are some big assumptions in all those statements there, but I think the fact is quite interesting that U.S. treasuries are now more volatile than gold. That really tells you a sign of the times economically, and it's something that we have not seen in a very, very long time. First time in 45 years. Think about that. That's crazy. And of course, what is one of the hardest assets of all? It's Bitcoin. It's Bitcoin. Bitcoin, of course, is the answer to that question. Very interesting, though, to see U.S. treasuries becoming actually such a volatile asset class. And it's unsurprising with so much money trying to chase after these treasury assets right now. It's not that crazy. I want to share this one as well from the Rational Roots. Supply held by long-term holders, 75.8%. Bitcoin holders are made differently. People are looking at this and they're thinking, why would I sell my Bitcoin right now? And look, I think one thing needs to be cleared up in investing in general, and that's sell shaming. If you sell your Bitcoin or your Cardano or your Ethereum or your what, I don't care what it is. If you need money and you need to sell, you need money and you need to sell. If you're massively in profit and you want to take profits, you can take profits. Don't let the diamond hand memes influence you and make you think overly greedily and not take profits when the time comes. Not saying you have to sell everything. As I laid out in my selling plan recently in the premium Wealth Mastery newsletter, I went over the idea that, well, I'm probably going to sell all my altcoins next cycle. Don't see a massive utility in holding a lot of them down into the ground once again. And in terms of Bitcoin, I'm going to sell some of my Bitcoin too, which might just explode certain people's brains. However, I'm going to do it. Not all my Bitcoin. I want to keep some of my Bitcoin. I'm going to keep about 2/3 of it, probably. Sell about 1/3 of it. Probably rebuy when the market bottom comes in. Still, though, nothing wrong with shaving a little bit off. Because at the end of the day, unless you're planning on simply taking your private keys to your grave, well, then I guess we can thank you for your sacrifice, because you're taking a bit of Bitcoin out of circulation, which makes the rest of the Bitcoin more valuable for everybody. So thanks for that. But realistically, at some point, you're probably going to want to realize profits on that somehow. Maybe you want to borrow against that. But if you borrow against it, you still have to pay back the loan. It's not straight profits when you borrow off this kind of stuff, right? Yeah. Nevertheless, seeing all-time high for long-term holders at 75.8%, it makes a lot of sense. I mean, who is selling their Bitcoin before BlackRock gets a Bitcoin ETF? Who are these people? And again, everybody's got a reason for selling. Don't want to sell shame anybody. It's just a question. Just a question. You must really need the cash. And look, a lot of people need the cash right now. We see in US, for example, I'm sure this is same across many developed economies, savings have gone from $2 trillion down to $200 billion. People are expected to be quote unquote broke by the end of October. Some of that money is going to be moving, of course, into money market accounts. That's not accounted for in that conversation, in those statistics, but still, it's going to be true. Still, though, credit card debt surpassed $1 trillion. Auto debt, all this kind of stuff is soaring. So some people will need cash, and they will need to sell their Bitcoin before BlackRock gets a Bitcoin ETF. And a lot of those people aren't going to want to do it. And it sucks if your hand is forced like that. I've had my hand forced to sell Bitcoin before at inopportune times, and it's not great. So if that's you, just realize there's always a chance to stack more sats in the future. Okay. And I know it's when you see all this stuff, you're like, Bitcoin and BlackRock. And yeah, I know, we all know. But man, if you got to pay the bills, if you got to feed your kids, you got to do it. So let's not sell shame people here, guys. Come on. Nick saying, seems like he thinks he can time the top. What a fool. I don't think I can time the top. That's it. Hold on for dear life will pay off greatly in 10 years. I agree, Nick. That's why I am going to hold on to the majority of my Bitcoin. However, I will take some profits on the next run and probably reinvest a certain amount of that back into Bitcoin during the next bear market. Not everybody necessarily needs to do that. I've held Bitcoin through multiple cycles now. Some of the Bitcoin that I hold today is Bitcoin that I acquired in the last bear market and before that in the previous bull run. So I'm doing okay on my Bitcoin holdings here. And I know that Bitcoin will be worth more in 10 years. That's why I'm holding the majority of my Bitcoin. And when it comes to altcoins, as we know, most altcoins will go down dramatically in price when the next bear market comes. Some of the top ones are going to do better than others. Ethereum, for example, is going to go down by 70%, where others are going to go down by 90%. And a lot of them are going to go down by 99.99% and never to be heard from again. That's why I'm going to be selling my altcoins, all of them. I'm not going to hold any altcoins into the next bear market cycle. Current plan, anyway. And when it comes to Bitcoin, I will be keeping a large stack of Bitcoin for that exact reason, because I'm taking a long-term view on Bitcoin. But within that, I can still play around with some of my money. If you want to do something different with your money, well, that's the great part about investing. You get to do what you want. I get to do what I want. And it's fantastic. And remember that to everybody listening, you can do whatever you want, whenever you want, right? You don't have to listen to people on social media tell you that you can or you can't do this. At the end of the day, it's your money. And everyone's going to have different requirements at different times, different prospectuses on how they're building their wealth, how they're growing their wealth. Maybe you're going to take that, you're going to sell some Bitcoin in the next cycle, and you're going to take that and you're going to start a business that's going to make you way more money or bring you way more joy and happiness in your life and let you get away from your regular job and do something that you're more happy with. There's a whole bunch of equations that go beyond simply just, I'm going to get super rich by holding my Bitcoin forever. Yes, I agree with that. I'm all about holding Bitcoin for a very long time. I've got a long-term time frame on the majority of my Bitcoin holdings. That doesn't mean that there aren't other things out there that can be done with your money. That's my opinion. Anyway, you guys, of course, can have your own opinions on that. And it's a personal question for everybody when it comes to finances. Now, before we get into the Ethereum news, the macro news, all that kind of stuff, just a quick note. If you're not on BYBIT yet, you got to get yourself an account, man. It is the best damn place for trading cryptocurrencies. If you want to do futures on Bitcoin and Ethereum, Solana, Cardano, all the top coins, they got you covered. You want to start trading some exotic spot altcoins? They got you covered for that too. It's one of the biggest spot altcoin markets in the world. Copy trading, they got you covered. and use that link in the description to start your account. You can get up to $30,000 in trading and deposit bonuses, depending on how much you deposit, how much you trade. Plus, you'll also get exclusive fee discounts. So check it out if you are a cryptocurrency trader. Now, let's look at the Ethereum chart. So Ethereum not holding up quite as well as Bitcoin currently. I know I got a lot of things going on this chart here, but short-term downtrend in place since the 14th of July. We had an attempt to crack out beyond that in the last few days. That attempt has failed, unfortunately. We'll see ETH recover one of these days. We are also seeing Ethereum putting in a bearish crossover. The 50-day EMA has fallen below the 200-day EMA. So ETH being a little bit more volatile and bearish compared to Bitcoin at the moment here. Again, a bearish death cross does not necessarily mean the price is going to drop at 50% or something like that. These death crosses, especially when they come in lower in the market cycle, or certainly where we are right now, maybe not as valid of a signal as a death cross that happens after like a 500% rally, for example. Now, interesting to point out here as well, one of the big things with Ethereum that I'm kind of keeping an eye on is this super, super mega giant triangle that has been forming up here. So basically, if you really zoom out on ETH, you can see that ETH is basically forming this big old fat ascending triangle starting all the way back mid last year. And if it continues to range within this triangle, it could actually go into mid next year. We'll see. We'll see, of course, how that plays out. But we need to see ETH breaking beyond $2,000 to really have a breakout here. And if it does break out beyond this massive formation that's currently in, it could send the price of ETH on a technical target up to around 3K. But much like what you see with Bitcoin, Ethereum, man, you know, not that crazy at the moment, price action wise. And what is interesting, though, is that we are seeing the effects of the merge really, really starting to play out. And I want to talk about that with you a little bit because I think it's super, super fascinating. So a year ago, has it been a year already? Yeah, it has. A year ago, well, something very, very interesting happened. The merge happened. So that was essentially the merge of the beacon chain and the proof of work chain into one. There's no proof of work chain anymore. Has not been for a year now. So what have the results of Ethereum moving over to proof of stake completely? What have they been? How have things been going with the reduction, the 90%, the so-called triple halving, the 90% reduction in emissions that the merge brought in, along with fee burning? Well, very, very interesting. So since the merge, we've seen a 0.245% drop in the supply. So Ethereum has, by and large, been deflationary for the last year. There have been moments when it's been inflationary at the start. And actually, if you look at the daily charts for this, we have seen minor inflation coming back into Ethereum over the last few days. You can look at the last 7 days to get an idea of that. In fact, currently we're up to 0.169% inflation if you look at the 7-day time frame here. But if you're looking all the way back since the merge, generally the supply has been going down. In fact, this is very interesting. Current supply of Ethereum, 120,223,000. Now, at the current burn rates over the last year, we have burned 977,000 Ethereum. It's a pretty big number. The issuance during that time has been 681,000 Ethereum. So the total offset here has been a supply decrease of 297,000 Ethereum. Pretty big number, pretty impressive number. That is during a bear market. That is when on-chain usage has generally remained pretty low. I mean, we've had a few days where, you know, I've had to pay 20, 30, 40 bucks for a Uniswap transaction. But most of the time these days, a Uniswap transaction costs a few bucks. Cool. But that also means that there's not massive use on the chain right now. but that massive use will come back. We will see more Ethereum burnt over time. But I think it's encouraging that 1 year in, that year was a bear market, by the way, 1 year in, we've actually seen 300,000 ETH permanently taken out of circulation. So pretty impressive. I like it. Well done, Ethereum, for successfully pulling off the merge and having that EIP 1559, which is the burning mechanism, the perpetual stock buyback mechanism, if you like to think of it like that, being very, very successful. So I dig it. That's great. Now, this is something I wanted to share as well. I saw this news floating around, and I was actually pretty blown away by it. So this is for Off the Grid. Now, Off the Grid is a crypto game, a Web3 game. It's being developed by a very talented team of developers. It's got Neil Blomkamp behind it, who is the guy behind District 9. I mean, if you see the trailers for this, it's like, yeah, the dude who made District 9 definitely is the creative director behind this, without a doubt. I do need to mention as well, I'm a private round investor in Off the Grid, and you can see my full risk and disclosure statement in the description of this video, but I invested in it because I think it's freaking awesome. So there you go. But check that out if you want to know more about my risks and disclosures. You'll find a link to that, of course, always in my pinned tweet on X or in the description of any of my videos on YouTube or Rumble or in the podcast. You can always find that information there. Now, what's crazy and why we're talking about Off the Grid today is that there was a battle royale game between 3 of the top Web2 gaming creators. Now, this is pretty interesting. So it's DR Disrespect, Clicks, and Imperial Hal. I have no idea who these people are, except that somebody else is telling me they're pretty damn big creators. Now, what's interesting is that YouTube video of these guys, these big Web2 gaming streamers playing a Web3 game, has got 1.5 million views. That's pretty interesting. People are paying attention. And I know there's been a bit of lack of acceptance from the Web2 gaming space to Web3 games, but that's because a lot of Web3 games have sucked, if we're being honest, right? We do need to see these Web3 games stepping it up and having great gameplay and fun features and all this kind of stuff. So this is pretty interesting. Off the Grid, go watch the trailer or something for Off the Grid one of these days. It's pretty damn interesting. A game without a doubt. I liked as well these thoughts here from Coop. He said, the West has completely lost hope in Web3 games. Yesterday, 3 of the biggest battle royale streamers in the world began promoting Web3 game. Off the Grid. Web3 response: at best, crickets, at worst, critique. This is going to be the best normie marketing for a Web3 game yet. This game is going to have an amazing user experience via an Avalanche subnet. By the way, shout out to Avalanche, one of my other investments. They've got this game building on an Avalanche subnet. So I like that as well. Super, super cool to see my investments coming together, playing together. It's super awesome, man. It's going to be on Xbox, going to be on PlayStation. Think about that. A Web3 game using crypto tokens and NFTs. It's going to be on Xbox and PlayStation, and it's being streamed by the biggest streamers because it's actually a good game. Look back at some of the crypto games that have existed, and a lot of them are just crap. Yeah, I know. We pumped their tokens and things went crazy, right? Yeah, I know. And I invested in a lot of different crypto games over the last few years, and a lot of them have turned out not very well. But this is one that I remain quite optimistic on the future of. So we shall see how that plays out. But what you really need to get your average gamer involved in Web3 gaming is a good game. That's all it comes down to. I know it sounds crazy, but if you build a good game that's actually fun to play, people might play it. Wild. Anyway, congratulations to Off the Grid for getting a bit of attention from the Web2 creator space. Next, I want to share this. This just blew my mind, honestly. Can Paul Krugman be any more out of date with reality? Probably, yes. I'm sure he can be. He seems to have been pretty much out of touch with reality for a long time now. Paul Krugman, the man who wasn't he the guy who said that the internet was not going to be any more important than the fax machine or something like that? It's just, this dude's basically got everything wrong forever. Apparently he got a Nobel Prize because that's the kind of person they give Nobel Prizes to. Nobel Prize. Come on. What a anyway, besides the point, old Paul Krugman here pointing out that, hey, look, he says, there's an inflation update. In the past, I've focused on a measure that excludes shelter, used cars, food, and energy. What? What? So if we just exclude the most important things for human life, yeah, so long as people don't have a place to live, let's just not talk about the place to live and your cost of your rent. Oh, food, you need food? Get out of here. That's ridiculous. Energy, what, you need to have lights to work? Come on. Toughen up. Pull yourself up by your bootstraps. You don't need food. You don't need energy. You don't need a place to live. All you need is fentanyl and a bridge to live under. That's it. That's your diet. That's your existence. Show up to your Amazon fulfillment center and be fulfilled. It's hard to imagine how out of touch some of these people are. I mean, it's just, what? Anyway. Obviously, Paul Krugman is horribly wrong. You cannot look at inflation data and completely exclude the literally most important parts of inflation for average human beings. Someone like Paul Krugman may have never had to grow up in a single mom household on food stamps where if you get a flat tire in the car, that's a crisis. It's a crisis event for the family. Sorry, you're not getting any new clothes this semester for school, kid. Here's some stuff from the secondhand shop, and kids are going to make fun of you in school for it. And this person, Paul Krugman, has not had to live that life, or has not lived that life in such a long time, if he ever had to live such a life at all, that he has no idea what it's like for the average person right now in whether it be America or Germany or probably China, wherever, people that are suffering from inflation, people that are suffering from the reality of trying to make ends meet on stagnating wages. Well, prices of everything are continuing to go up all the time. Paul frickin' Krugman, man, this guy. Now, here's another great one I want to share with you. End of Paul Krugman rant. Let's talk about this. This shocker, and let me describe the chart here in case you're listening to this on the podcast. So, Phil back on X asks, with all sincerity, what is the game plan here? So this chart shows America's finances. Now it's very, very worrying because America's finances not looking super awesome at the moment, to be honest. The deficit is massive. The revenue is declining. The deficit is up this year. The revenue is down this year. And the debt, oh my gosh, the debt, it's such a big number that the revenue is a tiny little blip in comparison, and the deficit, substantial, growing, going up, also a blip by comparison. We are seeing America's debt increase by trillions of dollars a year. It'll probably increase by $2 trillion plus over the next year. $1.6 trillion budget deficit, but that budget deficit is going to keep going up dramatically because the interest on the debt's going to be refinanced and have to be paid at a much higher level. It is crushing. $33 trillion in debt, man. You answer this for me. How do you pay $33 trillion in debt? And that's today. That's if they stopped everything today. It'd be $33 trillion. By the time anybody even thinks about how do we actually tackle the debt problem, which I haven't heard any political people really having a solid plan on how do you tackle $33 trillion of debt, because he can't. How do you do that? I don't know. I have no idea. I can't see any real possibilities for this beyond a complete default of the United States government and an inability to repay the debt and writing it all off and completely crashing the global economy. Maybe that's the plan for the Great Reset. Maybe this is what they want to do. They're just going to keep running up the debt and running up the debt and running up the debt and running up the debt until it crashes. And then they bring in central bank digital currencies as the bailout. Look, I know we screwed up before, but here's central bank digital currencies. They're here to save you from the crisis that we manufactured, by the way, but it's still here to save you from the crisis. And people are going to be so desperate, they're going to line up and accept it. They might as well just throw the microchips in there by that point, man. Microchip, everybody. Here, it's just so easy to spend my central bank digital currencies with the microchip in my wrist. My mom will have been right about everything since the 90s. You know, that debt is a monster, and it's becoming a real problem for the United States and the global economy more broadly, because if the United States has economic problems, everybody has economic problems. And look, can they just print $33 trillion? And again, by the time they actually start dealing with this, it could be $50 trillion. It's supposed to be $50 trillion by 2030. Print it away. Print your problems away. Well, in that situation, the average person holding US dollars is going to have their money so deeply debased that the US dollar becomes like, Venezuela money. Think about how much they would need to print and the impact of printing that. Look what happened when they printed, they printed $4 or $5 trillion during the whole Mexican beer crisis. And look what that did. That caused massive problems in inflation. And for the regular person whose wages still have not really gone up, what's going to happen if they try to print $40 trillion? Nothing good. They can't raise enough taxes. It'll crush the economy. Revenue's down already. It's a real problem. And I know that no matter what happens, BlackRock's going to win, JP Morgan's going to win, Goldman Sachs are going to win, the Federal Reserve, whoever the people behind, really the elites, the deep state, these are the players who are actually going to win out of this, because they will roll out CBDCs. And I really think it's the perfect opportunity for them to do that. I worry sometimes about the future for my children. What kind of world is this that's being built here? It's crazy. Anyway, let's now talk about Mark Cuban. Mark. So, Mark Cuban. Mark Cuban has lost $870,000 in a hot wallet hack. He says he doesn't know how he was hacked, but yeah, he got hacked. Interesting amendment to that story is that apparently he got $2.5 million that he had sitting on the same wallet, but for the Polygon network, moved over to Coinbase. I think Coinbase safely. So he didn't lose everything. That's a positive. We like that. That's good. I'm glad he didn't lose everything. But man, oh man, it's crazy. If you're a regular person in crypto, the odds are so stacked against you when it comes to everything. 9 out of 10 altcoins are going to go to zero. 9 out of 10 altcoins are probably just not going to do very much. 1 out of 10 altcoins will 100x. Can you hold it for that 100x? Probably not. And if you do hold it for 100x, you put all your money into Ethereum and Bitcoin and stable coins, you're going to get hacked. You're going to try to get something one day. You're going to approve a bad smart contract. All your money's gone. Crypto is still at the early stages of, pioneership, if you will. It's like the Oregon Trail. A lot of people are going to die of dysentery. I used to love that game back in the day. Loved when our computer teacher let us play that game instead of doing actual computer stuff that would be important for our future skills of computer nerds. But anyway, a lot of people are not going to make it because you're going to screw up a million different ways. And it's just a reminder. You have your hard wallet where you keep things that you just don't interact with stuff with. You have your hard wallet, you put your Bitcoin there, you put your Ethereum there, and that's just like you protect that passphrase like no tomorrow. You don't play around by putting new contracts and stuff on top of it. No. That's just your cold source, your vault. If you want to play around with different contracts and stuff like that, that's what you can use your hot wallets for. You don't have to have your life savings and you put $500 worth of ETH or something in there and then play around with stuff. Generally advisable a way to do it, because the truth is that even the best people, Vitalik, he got his X account hacked last week, 2 weeks ago, whatever. Crazy stuff, man. You got to be careful with your security in general online, but certainly whenever it comes to using magic internet money, because once those coins lose your wallet, that's it. They're gone. End of story. Be careful out there, guys. Take your security seriously. One thing I always say is that for you, simply being in crypto is probably just a hobby, a part-time investment thing, whatever it might be. But there is someone whose full-time job is trying to steal your money. So be smart, be careful. Don't fall for phishing scams. Don't send money to BS giveaways. Send us 1 Bitcoin, we'll send you back 2. No one's doing that, especially not Elon Musk. You know, Vitalik Buterin, Mark Cuban, Elon Musk, Bill Gates, they're not sliding into your DMs on Instagram. They don't want to help you with your trading. I know it might be a surprise for some of you guys, but that's not true. It's not them. You got to be careful. You have to be careful. Remember, it's someone's full-time job trying to steal your money. Be careful. Okay. Let's open up the floor to your questions. Let's hang out for another 10, 15 minutes here. And yeah, let's talk about what is happening for the crypto markets. I see a few people saying we're getting a price breakout. Something exciting is happening. Yeah, Bitcoin's up a few percent. That's I'm digging that. What do we have to zoom in on ETH here? What's going on? ETH is up a few percent. Let's see a 10 or 20% daily candle, and then we'll talk. Then we'll talk, guys. Crimson Caravan, how's Lark today? I'm good, man. Feeling refreshed after the weekend. Always nice to take the weekend. I still blast out a few tweets and sneak around a little bit online, but I don't make any content. I like to take the weekends off, spend it with the family, so can come back on Monday and be charged up and ready to go. All right. Oh yeah, here's a good one. I hate CCP. Why would someone spend their full time stealing cryptos instead of investing in crypto? Man, that's a great question. Honestly, you know, this is the thing I always think about these hacker type dudes. Like, you're obviously very clever. Imagine if you took those skills and applied them to something that wasn't being a piece of crap. Yeah, anyway, Pew Pew Poom 2. Lark, are you still bullish on AVAX? Have you seen the chart? Why the 52-week lows? Well, yes, still bullish on AVAX. I know it's a painful, you know what? Long-term bullish on AVAX, let's say. Short-term, I think altcoins can still see a lot of pain. Have I seen the chart? I'm trying to avoid looking at the chart, to be honest. And why the new 52-week lows? The reality, I think, right now for most altcoins is that they're suffering, they're struggling. You got to remember, Bitcoin's already a big risk for most investors. Ethereum's an even bigger risk for most investors. Anything beyond that is like crazy for most people. And even when, of course, we're not even talking about like NFTs or dog coins or stuff like that. Right now, there's a lot of macroeconomic stuff going on that has investors spooked for good reasons. Banks are tightening lending. China's got a problem. America's got problems. The EU's got problems. Inflation's hitting regular investors. Real estate markets are in trouble. Like, there's all kinds of stuff going on. And altcoins are unfortunately, a relatively risky asset class, and they will have their time. And I think that AVAX could have its time. That's why I have a bag of AVAX. But yeah. Okay, where are we up to next? Hey, Lark, what are your thoughts on Phantom as an old school DeFi gem and working behind the scenes of crypto folk aren't paying attention? You know, I am also not paying very much attention to Phantom, to be honest, and maybe I should be paying more attention to Phantom these days. But man, it's just so hard to you know, support, to keep your eyes on every single blockchain. There's so many of them. You know, when I had a bag of Phantom back in the day, I made some money on it. It was cool. Could have made a lot more money. I had held longer. C'est la vie. But yeah, I of course wish all Phantom holders the absolute best moving forward. But yeah, have not kept an eye on it. It's just so hard. There's like, what, 100 layer one blockchains now? Like, oh man, it's impossible to keep up to whatever is going on more broadly in the space. An axe to grind asks, Lark, did you abandon support for Julian Assange? I still support Julian Assange. I just took the poster down. Thought it was time to not have the poster up there all the time. So I'd have more of a crypto focused background versus a background a little more busy with other stuff. Still think it's a crime what's going on to Julian Assange. Still think he needs to be released from prison. And the fact that mainstream journalism doesn't ever talk about the deep injustice that it is tells you everything to know about mainstream journalism. Yeah. Okay. Mike Bennett asks, what do you feel when you hear a new all-time high is not happening? Well, when I hear people say a new all-time high is not happening, I just feel like that's just bear market sentiment. Because I heard the exact same thing in 2018 and 2019. $20,000 at the top. There's never going to be a new bull market, so on and so forth. There will be a new bull market. People will ape back into crypto coins. It's just what's going to happen. Human greed has not gone away. Now, macroeconomic conditions are making the market more wary of risk assets right now, especially cryptocurrencies, considering all the regulatory stuff and whatnot. But guys, come on. BlackRock's coming in, Fidelity's coming in, Invesco, Franklin Templeton, Deutsche Bank. It's so big. It's so big when you realize all the stuff going on behind the scenes. PayPal and the X app and the Grab app in Southeast Asia. And like, it's just nuts. There will be another bull market. There will be new all-time highs for, well, Bitcoin and Ethereum. I can't guarantee for all of your cryptocurrency assets. A lot of those altcoins aren't coming back, guys. All right, where are we up to? So many coins. Oh, I agree. So many coins. Are you related to Ugo? Ugo, I have no idea who this Ugo person is. Ugo. Johnny Rico says alts are extremely risky and still can have 99% downsides. This is true. Alts are very risky, and there's definitely a time in a season for like making big money with altcoins, and that season has not been for the broad altcoin market recently. Now, this year we've seen crazy pumps on some altcoins, like Rollbit did like 1,000x or something like that, and we saw Pepe Coin put in big gains, and we saw Unibot put in big gains, and a lot of other stuff throughout the year. AI coins had like a big thing in January and February. There's been times to hop into narrative-driven plays in the market for altcoins, but you got to remember, again, 9 out of 10 altcoins are simply not going to last the test of time. Go back. You go to CoinMarketCap. Here's an interesting thing to do. Go to CoinMarketCap and go and find their historical snapshot page. And go back to like 2017 and look at the top 100. Because I'll tell you this, the top 100 coins in 2017, there's like 20% of them maybe that are still even vaguely relevant. Most of them have been long forgotten about. So keep that in mind. Okay, where are we up to next? What is your favorite bourbon, Lark? You know, I don't actually drink that much these days. It's funny. I actually had a beer on Saturday, one beer. And it's the first time I had a beer in like months. Yeah, don't know. Gosh, it's been a long time since I had a bourbon. But I remember back when the bourbon's never been my favorite drink, by the way. But I'm more of a wine drinker personally. But back when I did have bourbons, I remember that one nice bourbon I had. I was like Rose. Was it Rose bourbon? Don't know. My buddy from Washington had some. And let me try some. I was like, that's a nice bourbon. I enjoy that. But I couldn't tell you what's a good bourbon or a bad bourbon. So there you go. All right, where are we up to? All right, I'll get off topic here. Oh, here we go. Vandermax says, I don't have a wallet. I have Bitcoin and ETH and Robinhood, Coinbase, and PayPal. Do you think that is okay? Is it safe? Look, this is not as straightforward as a question as I'd like it to be, because the reality is that the safest place to put your coins is going to be on a hard wallet, whether it be a Trezor or a Ledger or whatever other hardware wallet you would like to have. That comes with its own risks and rewards, of course, because then the reality is you are completely in control of your coins. PayPal cannot censor you. If Coinbase gets hacked and loses all their Bitcoin, you will still have your coins because you don't have them on Coinbase. Robinhood, I mean, who knows? They're a very highly regulated entity. You have no idea what could happen. Their wallets could get hacked. They may not reimburse people if that does happen. You don't know. You don't know. It's always a risk when you're keeping your coins on these centralized agencies. And we've seen over the last few years, whether it be what happened with BlockFi and Voyager and Celsius and Hodlnaut and Gemini, FTX, Cryptopia, and the other 20 exchanges. Yeah, Four Roses Bourbon. That's the one. Old school comp site. You got it. Whatever other exchanges have gone down, history has not been kind to keeping your money sitting on exchanges. Self-custody does remain the best way to be in your coins, be in charge of your coins, and it does help you really actually participate in the cryptocurrency revolution. That being said, the tricky part, and this is why Bitcoin ETFs are going to be good for a lot of people, is that we have to be real about the conversation. Look, we just covered Mark Cuban getting hacked for $1 million Vitalik, and like people make mistakes and they lose everything. And Mark Cuban can afford to lose $1 million and he's going to be fine. Your average crypto investor, they're going to lose everything and they're going to be screwed. So you have to realize that there are downsides to self-custody. It is a responsibility and a privilege to self-custody. When you leave your coins sitting on these centralized platforms, you're also taking a risk. So you have to ask yourself, what risk are you more comfortable with? Are you more comfortable with the risk that these centralized platforms are going to get hacked and you're going to get all caught up in bankruptcy proceedings and all this BS? Or would you prefer to have your risk profile being that you're in charge of your own self-custody and you're the one who's in charge of making sure your private keys and stuff like that are kept safe? I choose private custody. I choose self-custody. I understand why people may not, but that's my choice, and I think it's safer in the long term for your assets. Evan, Lark, much love from Houston. Thank you very much. Thank you very much. Haven't been to Texas before. Love to go one of these days. I know there's a crypto, not cryptocurrency. Everything's about cryptocurrency. There's a Tony Robbins conference happening in, I think, Houston. I want to go to, but I was like, yeah, it's too hard to get away with the little kids right now. Don't be selfish of me to do that to my wife. Anyway, any comments on XCAD? No, I do not know what XCAD is. Sorry. I mean, heard the name, haven't looked into it in any great depth. So that's my comment. That's my comment. Mike asks, Larry Fink is fascinated with tokenizing real world assets. You got to wonder what their play will be with that. Yeah, I agree. What the heck is their play going to be? Is it going to be on a public blockchain? Are they going to be token? That's coming. The tokenization of real world assets already happening. We're seeing US treasuries being brought on chain. We're seeing real estate being brought on chain. We're seeing debt being brought on chain. We're seeing shares being brought on chain. It's all very slow. It's all very early, but it's coming. And it's going to come in a very, very major way when it does happen. So this is definitely something that will be very, very big. And Larry Fink is definitely going to have a play for it. I don't know what his play is going to be, but you can guarantee that with BlackRock, it will be a big play when it comes. First, though, they want their Bitcoin ETFs. Terreal's Winning asks, will BlackRock be able to manipulate the price with the ETF like gold is? Thanks for the super chat, by the way. They are already trying to manipulate the price of Bitcoin with their futures markets on the CME and stuff like that. Will they have a great impact with their ETF market? I mean, look, when BlackRock gets into the ETF market, it's going to be a big damn deal. How much they're able to manipulate the price, that remains to be seen. And probably is going to depend a lot on how much Bitcoin they actually get. If they have, let's say, gosh, I don't know, like 5% of the supply of Bitcoin, just them moving that from one wallet to another will freak the market out and make everybody want to short. 100%, guys. So there's the potential for even stuff like that. So it will be impactful and they will have more of an ability to move markets when they do. Remember, everybody freaks out every time the FBI moves like 9,000 Bitcoin. I was like, oh my gosh, it's going to, like, everybody get out quick, short the market, price go down 10. Guys, it's 9,000 Bitcoin and it ain't crap. Come on. Okay, where are we up to? A couple more questions here. Then we'll finish up for today. Sam J asked, is SIM hacking a real risk? Yes, especially if you live in the United States. It seems to be, from everything that we're seeing and hearing, the United States is the most adversely affected by SIM swap attacks. So if you're in the USA, there are services that you can use. The name escapes me off the top of my head right now, but there's a company that you have to pay money to, of course. But if you have a serious amount in crypto, you may want to consider that. But they will protect you from SIM swap hacking in the USA. So I can't remember the name, but look up SimSwap hacking protection or something like that. You'll probably find the name of that company. But yeah, especially if in the USA, it's a real risk. Other countries, I think a lot less so, simply based on how SIMs are dealt with in other places. But yeah, Definitely take it real if you're in the USA. Okay, where are we at? Vladimir Putin back in the house, the real one, of course. Reading Lynn Alden's new book, Broken Money. Thanks for the super chat, by the way. Good exposition on how BTC fits into the modern monetary system. Highly recommended. Lynn is a very, very smart lady, so I would not be surprised. I have not read her book, but yeah, she's a great speaker. Very, very thoughtful analysis on cryptocurrency, Bitcoin, of course, in particular, when she talks. So yeah, there you go. I imagine definitely Bitcoin would be a good fit in the modern monetary system. I don't know what her exact take was, but I'd be curious to read it. So there you go. Okay, guys, that is all for today. Thank you very much for joining me on this stream. Of course, come back on Wednesday and Friday, where we're going to be doing this again between like 1:30, 2:30 New Zealand time. So that's going to be evening time on Tuesday and Thursday for all you guys on the East Coast USA, or late evening time for those of you in Europe. And of course, early morning for the Aussies. So wake up, guys. Say good morning to the kangaroos and tune in to Talk Crypto. All right, guys. Thank you very much for joining today's stream, and I'll see you next time.